Everyone who has not had the opportunity to meet Amanda Creel, this is our new amazing CEO, and she's on this evening to say hello to everyone.
Hey guys, how are y'all?
Hello.
I'm
Good. How are
excited
you?
to be here. I know some of y'all probably have heard my spiel before, so I won't make you suffer again like poor Renisha. She heard it more than she wants to. But I'm super excited to be here with you guys. We are super excited to hear from you guys and what you want to change. I hope you have a fabulous class and happy hour tonight. I have my happy hour myself. Diet Coke is where my happy is. So I'm doing that. And we'll do what? Did somebody talk? Thought somebody said something, but I'm happy to be around and do that. And I'd love to hear about different ideas or things you have or suggestions, concerns. I know I've heard lots about the phone system. We're working on that. We're working on some of the different ways that we do things and trying to make things better. I hope some of y'all were at our membership meeting today. We did it a little bit different than just another traditional Zoom. If you didn't, Stephanie and her team are working really hard to get a video out about it. So take a few minutes to do that. You all should have an email right now that asks you to vote in the bylaws vote. Who's voted already? Anybody? Oh, look at Radisha coming out. Who else? Come on, come on, come on. If you haven't, you will be my favorite realtor if you can raise your hand before you leave tonight. Come on. All right. It's super important that you vote. We need over 450 people to vote for those to be able to pass. One of them is to extend and give y'all more time to do your code of ethics, which is a win for y'all and helps us be on the right page with NAR. The other is about reducing it so that we don't always have to try to get 450 if we need to do something quickly. We have a lot of stuff in our industry that happens quickly, but we do need your help. So Stephanie's going to share the voting info with y'all in the chat box, which is awesome. But any questions or anybody want to know anything about me? If you haven't seen me, yes, I'm an Auburn fan. Yes, I bleed orange and blue. No, do not cuss at me with those other words. We got it? All right, good. And I know somebody in a minute is going to be smart and put something ugly in the C. Took like 2 seconds. They're going to put ugly words in the chat box. That's just not
There
nice.
it is. There it is.
2 of you. God. But no, seriously, I know you got to lay your colors down when you're in the state of Alabama. I grew up here, so I get that. But we are looking forward to great things, and I think together we're going to make those happen. So I hope you guys will come and do things with us and get together, and I will let you slip. All right. I like Adrian. I like that. She's making me go. I like it. But yes, we will definitely do that. At least we got one War Eagle out of the group. That's a little depressing. YPN, you have to be diversified. You cannot be all the other people. Roll Tide. Ugh. I mean, I don't let my children cuss. I don't know why y'all are doing that to me. But but no, we're super happy to be here. Does anybody have any questions or any comments or anything going on that you want to talk about? Well, I hope you have a fabulous class. I know y'all are here to learn some awesome stuff and update your businesses and make a difference. We are excited at BAR to kind of figure out what those are. So feel free to reach out to me or call me or email me. A lot of people are doing that right now. So it may not be within 5 minutes that I get back to you, but I promise you every call I've received since I got here and every email I get back to you. So feel free to reach out whenever you can. And I just look forward to getting to meet some of y'all in person, hopefully sooner than later when we can get over some of this COVID stuff. All right. And Stephanie gave y'all my email address just in case you didn't know it. So we've got everything covered. She's been my great right hand all day today between the membership meeting and that, making sure y'all have what you need. All right. I'm going to go so y'all can learn exciting things and get back to work because I got some stuff to catch up on. But I appreciate all of you and I look forward to meeting all of you very, very soon. Bye, guys.
Thank you, Amanda. We appreciate you. All right. Well, welcome, everyone. I am Stephanie Marthins, and I am the Vice President of Communications here over at the Birmingham Association of Realtors and the Greater Alabama MLS. Some of you probably didn't realize that I do communications and marketing for both organizations. We were originally going to have someone by the name of Sloan Roden be kind of a co-host with our two co-chairs today, but Sloan is unable to make the event after all. She's been Zooming all day for a bunch of other bar business, and so she's not going to join us. So I'm going to pitch in on her part of this presentation, and then I'll be turning it over to our co-chairs of YPN. So first of all, if you have any questions, go ahead and throw them in the chat to everyone. And the appropriate person will be trying to get around to the questions and make sure they're getting answered. All right. All right. So if Sloan was here, she'd say hello and welcome to the YPN Happy Hour. It's a wind down event, and Sloan is actually our advisor, and she's also a Bar Association Board of Director. This afternoon, we're going to take a look at the loan process and the realtor's role. Then we'll have a quick presentation about that with some Q&A. First, I want to start by thanking our sponsor, Weber Mortgage, for their time today and for the happy hour packages. I heard they were fabulous. I saw a video. You got a tumbler and some wine and some snacks and things. Thank you so much to Weber Mortgage for putting that on for us and delivering those and getting them out to our attendees. First, I want to tell you a little bit about YPN. I'll try and do the best I can, and I'm going to introduce the 2021 YPN committee. YPN stands for Young Professionals Network, and it's not just the young individual, it's a young at heart or someone who's new to the industry. And their goal is to provide programming that helps you be successful in your business, especially in these early years in the industry. So that's part of this program today, is learning how to be a good participant in the loan process. And the Weber Mortgage, Michael's going to talk to us about that. YPN also has a national organization, for which I'll drop their information in the chat here shortly after I'm done running my mouth, and you'll have that information as well. There's a lot of good resources out on the NAR website for the new professional. All right, so we have our own information that we put out too. We have a YPN newsletter. I'm dropping that in the chat right now. That is a link to the last newsletter that went out, and it comes out again next week. Be on the lookout for that. If you're not getting it, email me, and I will make sure you're on the list for next month or for next week. Also, we have some YPN social media pages, what I'm dropping in the chat right now. And one of them is absolutely brand new. Honestly, it's so brand new, we don't even have our first post out there. But go out and follow it, because we're going to start posting content there that you can find helpful, you can share with your clients, or just tips for you and your business. So let me go back, and I'm going to introduce our YPN committee, and hopefully everyone's here. Some people were having trouble getting in and then didn't make it back in time to participate. But we have Jennifer Harris as a co-chair. Where are you, Jennifer? There she is, she's waving. Jennifer is with Weber Mortgage, and she's part of one of our sponsors today. And then we have Renisha Richardson, who's also a co-chair. Where are you, Renisha? Waving, thank you. We've got Megan Hilt. Where's Megan? She's in my top left corner. Shayla Dotson, did you make it on, Shayla? I don't think Shayla made it just yet. And we have Bridget Lovett. Where's Bridget? There's Bridget. Great. Hey, you guys, you can find your chairs for YPN and your committee members out on the member portal. If you log into the member portal, there's a tab at the top called committees, and you can find members of any committee at bar out there. And you can contact them. Their contact information is out there too. So, all right, so I'm going to turn it over to Renisha now. She's one of your co-chairs for YPN.
Thank you so much, Stephanie. It's an honor to be here tonight. And thank you so much for all the work you do at BAR. We appreciate it. Here are a few upcoming programs you all should know about. Stephanie will post links to all the items in the chat. There's a membership voting going on right now, and it's time to cast your vote. Be sure to make your voice heard. Voting continues until February 25th at 4:30 p.m. If you haven't already received it, be on the lookout for an email with a link to the voting website. YPN presents The Listing, a 3-part series. Part 1 will cover listing sources and listing presentation on March 18th from 9 to 10 a.m. It will be a hybrid event. The first 30 to sign up to attend in person will partake in a bagel and coffee. Others can attend virtually. Part 2 will cover marketing the listing. And part 3 will cover leveraging the listing for new business. We're looking for sponsors, so guys, don't be shy. If you have any ideas or any suggestions, please reach out to Stephanie for all those opportunities. I'm going to turn it over to my co-chair, Jennifer Harris.
All right. Thanks, Renisha, for updating everybody. So everyone, just be sure to check your calendar. So before I introduce our speaker slash my boss, just a quick reminder. So we have, we have something put together for you guys, but obviously we want to be able to answer any questions. So please, as he goes through, put your questions in the chat, and then when we circle back, we'll be able to go through those questions. So without further ado, I want to introduce Michael Weber. So we are a second generation family owned mortgage company, and Michael just happens to be that second generation with about 18 years of experience in the mortgage industry. So Michael Weber, I'm going to turn it over to you.
Okay, thanks, Jennifer, and thank you guys all for being here. This is always exciting for us to plug into newer agents and young at heart agents, and be just really a source of knowledge for you guys. So that's our goal. My goal is just to educate. I'm gonna give you the disclaimer that the opinions expressed in today's presentation are solely the opinions of me and do not reflect the VAR, although they would probably agree. And with enough alcohol, they would certainly agree. So we're going to go, I'm going to keep this super informal. I'm going to assume everybody whose face I can't see is already into the wine. And so if you're on this call, but your video is not turned on, at the end, we're going to call all of you lushes, and we'll love you for that, but that's what we're going to do. So for those who signed up first, you got one of these cool bags, which you can't see because I have a weird effect on, but hope you guys enjoy it. We got a neat little tumbler. Let me show you the difference. This is the difference in the little stemless wine glass that we got for you guys. And then I'll show you this. This is the wine glass that I use. I've currently got water in it. It holds about a gallon. So later on, this won't be clear anymore. All right, so that's all the corny jokes I have. So let me talk to you a little bit about your role as the real estate agent in this process. And Stephanie, did you already turn it over to me?
Can you share or no?
No, I'm seeing host disabled participating screen sharing.
I'm going to give it to you then. There.
Okay. So let me share this and drag this over. Oops. Oops, y'all don't want to see my email. Are you seeing my PowerPoint now?
Yep.
Good. Okay. So the loan process and the realtor's role. This is every agent you talk to about this would probably give you a slightly different definition. So you're going to figure this out as you go, and it may change from time to time. I know a lot of agents, when they're new, want to learn as much as they can about the mortgage process. And then as they build their book of business and they get more and more busy, they run out of time to work on the mortgage education. So really, I'm going to talk to you about kind of 3 different views of which way you can go with this. And these general approaches, there's no right or wrong. And if the words that I've written in here indicate that one's better than the other, that's not my intent. Option number 1 is I'm the realtor and I don't really want to know anything about mortgages. I don't need to know your situation. I don't want to know your personal information. I don't want to know what you've been through, not in a bad way. Like, of course, you're going to want to get to know your client, but I don't want to get into your personal space and learn your finance. That's kind of number 1. Number 2 is kind of the other end of the extreme. Hey, I want to know everything about you because I want to help to advise you by being an expert. This same type of agent is probably also going to want to know everything about homeowners insurance, and they're going to be very proactive in advising their clients about that. They're going to want to know everything about title insurance, and really every aspect of the experience they're going to try to control, not in a bad way. That's a good thing in their eyes, that they're giving their client extra service by being an expert in all these areas. And then the third option is the middle ground, right? The realtor needs basic mortgage knowledge, and they need to have some great referral partners. Now, I only put referral partner because I'm only one company, but your brokers are going to tell you to recommend at least 3. We can have that We can have that conversation after you finish the bottle of wine. So those are the kind of three basics. So let's talk a little bit of specifics. This was option number one. The realtor doesn't want to know anything about the person's particular situation. They feel like they're prying. Maybe they feel like it's not their business. So just some quick advantages and disadvantages. From an advantage standpoint, it's less for you to know. If you don't try to understand the nuances of the mortgage process, you have more capacity to understand the real estate process. Okay. So there are some good things to saying, hey, I'm not a mortgage person. I have a mortgage person I can refer you to. They can answer all your questions better than I can. The disadvantage to that is your role as a fiduciary, as a someone who's responsible to your client, is to be a fail-safe and protect their best interest. If you know absolutely nothing about the mortgage business, then you may not know, hey, this rate sounds a little bit high, or this is a challenge. Like if you talk to somebody before they even went to a mortgage person, there are some challenges that an educated realtor may know about that you may not know about, that you may could advise them on before they get further down the road. So not wanting to know anything about the process has some, positives and negatives on each side. What about trying to be an expert? So from the standpoint of trying to be an expert, you really can counsel your client on real estate and lending both. And there are a lot of ways to be an expert, know a lot more than what I would say the average realtor knows. And some people have a huge capacity for learning, and they just process stuff quickly and they understand it and it all comes naturally to them. And they like have the ability to kind of add this whole knowledge base in addition to being an excellent real estate agent. So what are the disadvantages of it? The disadvantages of it are just like in real estate, everything changes in the mortgage business and it changes pretty quickly. In our office, we're in the process of learning the new loan application that goes into effect at the end of the month. So it can be very difficult for you in your role as a realtor to keep up with what's happening in the mortgage business. Think about COVID and how it's impacted everybody over the last year. It has had impacts all through the mortgage industry. Documentation has changed, how long the documentation has lasted, what extra documentation we need to get. Credit scores have changed based on documentation. We've had the whole your ability to file for forbearance without any documentation in any circumstance. And now we have to have guidelines for that. So there's a whole lot for us to keep up with, even as mortgage professionals. It can be super overwhelming if you try to be an expert in the mortgage field as well. So again, this is option number 2 in our three different view list, but there are some advantages and disadvantages. The third one, this is the one that I really like, and I love working with agents who are in this because there is a happy medium. Most things in life have a happy medium, right? So I'm a realtor. I need to know the basics of mortgage. I need to have intelligent conversations with my clients. I need to be able to protect their best interests. And those are all in the advantages stage. But I don't have to be an expert. I don't have to know less about real estate or spend less time in real estate because I'm spending more time in mortgage. From a disadvantage standpoint, I was really trying to figure out the disadvantages of this. And if you have the second part of that phrase at the top, which is realtor needs the basic knowledge and a great referral partner. If you have trusted referral partner or partners, then the disadvantages are minimized because your clients, I think, want you to be an expert, but people are okay with us not having all the answers as long as we can be a resource for helping them find the answers, right? So I don't have to know about real estate. If I'm a mortgage guy and I have a customer who calls and says, hey, we're thinking about selling and buying, I don't have to know how to advise them on real estate. I just have to have realtors that I can refer them to and say, great, here's somebody that I can connect you with. The opposite is obviously true. If you're a real estate agent, knowing everything about mortgages is probably going to be unlikely. Knowing nothing about mortgages is probably not in their best interest because you won't be able to see red flags as they're coming. Having a great referral partner and knowing the basics is kind of the sweet spot in the happy medium. So does that make sense to everybody, the people that I can see? Does it, I mean, is that kind of a, I really think people will kind of, if you talk to people, you could, your other agents and your peers, you could probably group them in one of those three. How much do you know about mortgages? How much do you try to advise your client? And you're going to get a pretty good feel for which side they're in. So no matter which of those three fields that you want to be in, but particular if you want to know everything or you want to be educated but have a perfect or an excellent referral partner, these are some basic questions, mortgage related, that you can ask your clients, that you can give simple advice to, that can tell you whether you're going to have red flags early on in the process. And then you can tell to your your mortgage partner, hey, this person may call you, just giving you a heads up. Here's a situation I found something out about. So the first one you guys all know, right? Your brokers and your peers, and you probably know this if you've bought a house. Have you already spoken with a loan officer or been pre-approved? This is like question number one. I hope you guys are asking every person you talk to that says they're interested in buying. Once you've built some rapport at all, any little bit of rapport with your client, it's so important to start with the pre-approval process for all the obvious reasons. You're investing your time, energy, and efforts in finding them a home. If they can't buy that home, it's okay that you're investing time and energy in them for the future, but you need to understand that on the front end so you can prioritize your day. So if they answer that question, yes, I already have a loan officer or I've already been pre-approved. I love this question and I don't think it gets asked enough. Do you have a relationship with your loan officer or were they personally recommended to you? Like, that's a fair question. That is not you being intrusive. Hey, great, you've been pre-approved and you have a loan officer. How well do you know this person? Are they a friend of the family? Are they your brother? Are they just some guy that you met? Did you call a radio ad? Like, what is your relationship with this person? It's important for you to know, because when you're consulting with them about the whole process, especially if there are bumps in the process, you know, you don't want to say something bad about a loan officer who is your client's brother-in-law or something like that. So just understanding their relationship with that loan officer is super important. Plus, if you don't know this loan officer and they don't really know this loan officer, maybe you need to be a little bit more wary. If it's somebody that you know or somebody that was recommended to them by that friend or family member, then you can have a little bit, at least on the front end, you can be a little bit more comfortable in that. What if the answer no? Then obviously, can I recommend an excellent loan officer to help get you pre-approved is the easy next step. You need to talk to your broker about how many names you give out. My opinion on that is if you give 100 names and they choose one and they're the kind of person who's going to sue you, they're going to sue you no matter what. So I really love the agents I work with that maybe have 2 or 3 mortgage people, because there are different products that people don't offer, but they match the person with the loan officer that they think is going to be the best fit. Sometimes that's most of your clients may go to one loan officer, and sometimes you might have 2 or 3 different ones. So number 2, this is a super important one, and I think this is a kind of new how people handle this. Do you know your credit score? How many of you guys know your credit score? Nod your head if you know your credit score. Okay, I'm seeing several heads nod. So the answer to your question is you may know a credit score, but you don't know the mortgage credit score. All right. Most people don't understand this, and I'm not going to get into too much detail, but there's basically 3 different credit bureaus: Experian, TransUnion, and Equifax. Each of those bureaus have 7 different formulas for calculating a credit score. One of those is the consumer formula that you see on your Discover card or your Visa or whatever. But we use the mortgage score. Now, what's the difference? Well, without boring you with too much detail, if you are looking at the consumer score, if you have 7 accounts, one of them is a mortgage, it's counted as 1/7 of the score. If you're looking at a mortgage score and you have 7 accounts and one of them is a mortgage, it probably is more like 45 or 50% of the score. So you can see how the score is going to be different. If you had a 30-day late on your mortgage, but all your other credit is perfect on the consumer score, it's not going to hurt you as bad as if you have a 30-day late on your mortgage. So when they say, this is a great question, do you know your credit score? They go, yeah, I know my credit score. Your response to that is, okay, the score that you know, may not actually be your qualifying score. You need to speak to a loan officer and find out what the true score is. Oh, why is that? Well, because there's different ways to calculate a score. Okay, cool. So now you've encouraged. I default to the word steer, but I know that's kind of taboo in the real estate industry, so forget that. But you encourage your people, check with your loan officer, and let's find out what your mortgage score is, so you'll know. And then on the no answer to that, oh, I'm being asked to let people in. Oh, I see. I'm sorry, I didn't realize I would be in control of that. Okay, on the no side of that, do you know your credit score? Well, obviously, if they don't know their credit score, that is the number one thing they need to understand, their credit score. And you don't have to necessarily know their credit score, but you should have an idea of credit buckets to be able to advise them. For instance, if they're below a 620 score, most lenders are going to need to do some work on their credit before they can lend them money. If they're in the 620 to 680 score, they're probably got a decent shot. If they're 680 and above, I mean, there are other factors that could eliminate them, but their credit is not going to eliminate them most likely. So that's the credit score question. Have you ever had a property foreclosed on or filed for bankruptcy? Now, this question seems really intrusive, but the reason that I tell you to ask it is because if you're going to know this, it's going to come up at some point. It's better that it comes up on the front end. You can advise your client better on who they need to work with if you know that they have a past foreclosure or bankruptcy. If you don't know this, then you might encourage them to talk with one person, and if you know it, you're going to learn in this business, if you haven't already. There are some mortgage people that do a better job working with people through challenges, and other mortgage people that may be just better at the ones who are ready to go. So asking these two questions, the answer to these questions, if it's a yes, these events may not keep you from buying right now, but you need to speak with a loan officer to be sure. So again, the whole goal here is to keep the process moving forward, right? So if you ask the question, they say yes, hey, that's not necessarily a deal killer, but I want to connect you with the right person to help you through this. If they say no, great, you've just avoided the two biggest roadblocks to buying a house. All right, so those are just some basic questions. They're simple, they're easy, they're not too intrusive, and they're super important for you to know. Do you have a loan officer? Have you been pre-approved? Do you know your credit score? And have you ever had a bankruptcy or foreclosure? Again, if you have questions, ask them in the chat. We only have a couple more slides, and then we'll have plenty of time for Q&A. All right, so the basic loan process. If you've done any loans, you may have an idea of this already, and it changes a little bit from company to company. Like, there's not really 5 stages. Depending on the company, there may be 10, because they may break out certain things into more detail. But basically, we generalize it, especially for first-time buyers, into 5 stages. 1, you start the process. So your loan process is started. Your loan officer has gotten some basic information from you, and they're giving you some options to meet your needs. Number 2 is you've done the loan application, and you've provided everything that the loan officer needs. They have completely filled this out. Everything that they need to submit to underwriting, they know about, and they're going to send you disclosures so that you can sign saying, yes, you want to get a loan. Number 3, your processing is complete. Processing is usually the beginning, the internal process where the lender reviews the application and the documents, and they're not really saying, do these documents meet Fannie Mae guidelines, but they're just saying, do we have everything we need in order to get it in front of an underwriter? And then they submit that to underwriting. Stage 4 is the conditional loan approval. When the underwriter goes through all those documents and says, yes, this meets HUD standards for FHA or VA for their guidelines, they'll come back with what's called a conditional loan approval. They'll say, yes, we can approve this loan, but you need to get these other 2 or 3 documents, or you need to rectify this situation or whatever. And then once that gets handled, goes back to underwriting, and they get a clear to close. So probably a lot of y'all have been through that. This is a good, easy I'm assuming we're gonna send you all these slides. This is a good, easy slide or flyer to kind of give to your client on the front end if you want to talk about the basic stages of the loan process. All right, so this is kind of the breakdown of percentage of completion. This is what we send to our clients as they move through each step. And you'll see that most of the work is on the back end, right? There's only 60% of the work is done through the first 4 stages, and then 40% of it is through that last stage. So the process gets started, and then taking the application is usually very early in the process. A lot of lenders will send out a link to an online secure loan application for the client to complete. Once that's done, they're about 30% of the way through the process when they go through the processing and the initial review of their documents by either the loan officer or a processor. And then when they get that initial approval from underwriting, they're about 60% of the way through. And the last 40% is just dealing with the headaches. If there are big headaches in a loan, they usually come up right here when we're trying to figure out if we can get this person pre-approved because of this bankruptcy that's only 1.5 years old, or they come up down here because there's something weird. Hey, we got this to underwriting, but there's something in the tax returns that the underwriter doesn't like, they need clarification on, and that gets sticky. And that's really it. Those are the slides that we prepared, and that's basically, see if I can get out of this thing. Here we go. That is basically what you need to know. You're going to ultimately make the decision of how educated do I want to be as a real estate agent? How much information and knowledge do I want to have to be able to discuss with my client? And well, let me stop the share here. And how much are they going to rely on me? And am I just going to have somebody to connect them with that I know and trust to give them sort of the best information that they can have? So Stephanie, is there a way for me to give you control back here?
Sure, if you can go to the top of my box where you see me talking and click on the little 3 ellipses there. It should say, give me hosting privileges or something. Make host.
Did it. Yep.
Okay.
So
perfect.
How do y'all want to handle Q&A? Y'all just let me know.
You guys can drop.
If everyone,
go ahead, Jennifer.
sorry, Stephanie. Well, I was going to say, if you guys want to drop any loan questions that you have in the chat, we can go from there.
If you guys have a question, there's probably 10 other people on here who have a question as well. So please ask. Just so you know, from our standpoint, Jennifer will be saying hello to each of y'all. I know she's probably already met a lot of y'all distributing our bags. So you don't feel like you have to ask it today. You can always ask us later. But again, if you're asking the question, somebody else is asking it too. So please don't hesitate. All right, do y'all want me to read the chat? Are y'all reading the chat? What's happening?
I mean, I was going to read it, but if you want to read it, you're more than welcome to.
No, you read it if you see stuff in there. This isn't going to be much of a social period if y'all don't talk, if y'all don't ask some questions.
We got a bunch, Weber. Okay, first one is, this is from Bridget Levitt. Is there a specific product that you offer that isn't a well-known one?
God, that's a great question, Bridget. So the world of lending is broken down into about 5 different programs overall, conventional, which is Fannie and Freddie, FHA, VA, and USDA. Now, outside of those, there are some ancillary products, like some banks offer loans to professionals, where the guidelines really just change. Like maybe they don't require as much money down. If they're a bank, they're required to lend in any areas where they have deposits, where they have banks or branches. So they might do some what we call CRE or CRA lending. For Weber Mortgage, we're kind of like in the middle. We're a lender, but we're also a broker. We're lending our money, but in the end, we're going to sell that loan. We're not a loan servicer. So we don't have specialized products that are just for us. Good question, though.
Okay, next question. Are you experiencing any appraisal issues lately?
So, Billy, that's a great question. And I'll tell you, from our standpoint, it's one of the biggest advantages that we have, in the sense that because we're the lender, we have more control over the appraisal process. So we have, for Weber Mortgage appraisals, we only have 4 appraisers on our panel, and those appraisers give us priority. We make sure that we're paying our appraisers better than anybody else is. And then we have relationships with those appraisers. So we hold them to the standard of communicating with the agents. And this is the biggest problem I think we run into in the industry. If you're dealing with a bank, they deal with an appraisal panel that may have 30 appraisers on that panel, right? And there's nobody going to hold them accountable if the customer or the realtor has a bad customer experience. So if they're matter of fact, or they have a bad day and they're rude or whatever, they're not going to get booted off, because the bank is just going to say, well, that's just the appraisal management company and we can't control that. Well, at Weber Mortgage, we control that very carefully. So I would say, as an industry, Billy, this is a difficult, when you have values skyrocketing, appraisals by definition are based on what happened in the past. So how do you take a property that is selling today in a market where there's this feeding frenzy on properties, and how do you make an adjustment of yesterday's values based on today's energy level? And it's tough. And some appraisers try harder than others. So if you find you're having appraisal issues, you may want to identify whether you're always having appraisal issues with the same lender, because that lender may be very hands-off when it comes to ordering appraisals, and you might get better service going somewhere else. Is it difficult? It is difficult, because if you guys, when you go through that listing event that YPN was promoting, and they're talking to you about, here's how to calculate prices and all that kind of stuff. Remember, your opinion of value is going to be different than the buyer's agent's opinion of value. And that's going to be different from the appraiser's opinion of value, because it is subjective. There are rules that they have to follow, but in the end, they're a guy or a gal that makes a decision about the value of that house. Good question. All right, Beth says new construction is asking for CLA within 7 days. Is that a challenge for the lender to accomplish? If you're asking, I don't know what the term CLA is. If CLA is closing, they want us to close within 7 days. Is that CLA? Can somebody clarify that for me?
Conditional loan approval.
Oh, can we get a conditional loan approval within 7 days of the contract? I mean, think about it this way. If they're building from scratch, nothing that we get today is going to be good at closing, because documents are only good for 90 days and it's going to take 4 to 6 months to build a house. So they shouldn't be asking for a conditional loan approval 6 months ahead. Now, if they have a spec home that they're taking a contract on and they ask for that, it's a challenge for anybody and it's an unfair ask, but we could do it. Could we do it on every file we process? No. I mean, our underwriters, and I mean, in our industry, we can't hire people fast enough right now because there's so much business out there. Now, here's the thing, that'll change once the rates go up a little bit and the refis stop. So you should be expecting your loan officers and your mortgage companies to be giving you excellent service, because if they're not, it means they're taking the low-hanging fruit of the refis and they're just saying, we'll worry about the purchases later. The purchases have to be priority for them because that's their future. So if you're getting these long-term times, there's a couple of the big banks I know can't close a loan in 60 days, but we're still closing loans in 25 days, Beth. So can we get a conditional loan approval within 7 days? We certainly can, but it's pretty unreasonable to ask it. And most of the builders that I deal with, I don't know that I've seen that happen. I've certainly been able, I think in the circumstances that we've had them ask for something like that, to give them something that puts them at ease that the buyer is going to be able to get purchased.
Okay, next question. How do hard inquiries affect the credit score for clients getting ready to close?
Okay, so there's kind of two things in there. A hard inquiry shouldn't be done for clients getting ready to close. A hard inquiry is when someone checks their credit and gets a score. That should be done at the beginning of the mortgage process. Now, if for some reason the credit report has to be updated, like in Beth's scenario, if they're buying new construction and we did a pre-approval where we pulled their credit and it took 6 months to build the house, we're gonna have to re-pull their credit, but we should still be doing that 2 or 3 months out because our credit reports are good for 90 days. Some lenders are 120 days. So if they have an inquiry, we're going to recheck their credit with a soft pull within 2 days of closing. And if they have an inquiry, we're going to want to find out if they got new credit, but we're not going to look at the score. We don't reevaluate the score at that point. We're just looking to see, did they get any new credit? And if they did get new credit, we have to figure that into their debt ratio.
Okay, next question. Ooh, okay. Do you provide loans for mobile manufactured homes and or land purchases?
Yeah, Renisha, that's a good question. And let me tell you, the answer to that is yes, but no. And here's why I say that. We can do them, but we're not good at doing them. I'm not gonna lie to you. They're a whole different ball game. We've tried them. They're a challenge. You got to know lending. So this is a super important point for y'all to hear. You don't need to find a lender or a loan officer who can do everything. What you need to find is a lender who can do as much as they can do, but they have good, strong people that they can connect you with if it's a product that they can't do or that they're not good at. Like, this is really important. I've been in this business 18 years. If you call me today, Renisha, and say, I have somebody wanting to buy a double wide mobile home, it's $150,000. If I'm maybe a new loan officer who doesn't really know, and I know my company does those, I may try to work that deal and it may be a disaster because my company may not be good at them. Mobile homes have whole different ball games. You got to get registration numbers. You got to find out, has it been turned into real property, all that kind of stuff. So if I don't know what I'm doing, I can make a mess of it. If I'm a good loan officer, I'll say to you, yeah, technically I can do it, Renisha, but I know these 3 guys who are all great mobile home lenders. I got 2 people that do mobile home lending that I can refer those people to. And then I don't jeopardize you're in my relationship by trying to do something I'm not very good at. We don't do land purchases either, but again, it depends. Land purchases all depend on the size of the land and the intent. If you want to buy a lot and build on it, that's a whole different ballgame than if you want to buy 20 acres and hold it for 2 years and eventually build your dream home. So again, some banks can do both, but nobody does everything well. So we have sources where we'll say to you, okay, I'm going to ask you those same qualifying questions I'm telling you to ask your client. Okay, Renisha, what are they buying? How many acres is it? What do they want to do with it? Okay, here's a couple of people that I would recommend that they talk to. Or do you already know somebody that you want me to connect them with? Because if you already got a resource, I'd rather connect them with your resource than me connect them with somebody that you don't know. So there's a lot of different ways we can manage that where you are still the person who's providing the information to them.
Okay, next question. What issues do you typically run into with realtors that could prevent or delay a smooth transaction, i.e. missing forms, lack of communication?
Okay, I hope I'm saying this right. Is it Takina? This is a fabulous question. And I love that you asked this question. And I'm not here to beat up realtors because I love realtors, okay? The single worst thing that we run into is people waiting till late in the process to order something. Now, it's a little bit unique time now because things are happening so fast and properties are moving so fast that you won't see as much of this now. But when things were slower, and I'm gonna point out my buddy Hal Harris, who's on this call, and Hal's been in this business a while. And so he knows when things were slower, some agents may want to wait till late in the process to order like a septic inspection or a wood infestation report or something in case something went bad early in the process and they didn't want somebody to be responsible for paying for it. Well, you can't do that now because the process is moving so fast that people aren't really tempted to do it. But the main thing is, if it's something that needs to be handled, get it handled as quickly in the process as you can. If there's going to be an issue come up, we want to know about it as soon as possible the last thing anybody in the process wants is there to be something on title that has to be resolved, like a old mortgage that has to be satisfied in order to get a house sold. And the only reason it wasn't already done is because, you know, the listing agent didn't order a preliminary title on it. I mean, those things, I don't do y'all's business, but even I know there are certain things that you can't do too early in the process. The other thing is, and this sounds funny because if you talk to anybody in your industry, they're going to tell you their biggest complaint with mortgage is communication, right? I can't get the guy to call me back. I mean, that's just a sad fact about what agents think about loan officers. And a lot of times it's warranted. So, but the opposite can be true too. So if I need something from you, the only time I'm calling you, I really need something. And if I need it, we're not going to close without it. So if a loan officer is calling you, prioritize that. If you got 10 voicemails and one of them's a loan officer on one of the deals you're working, call that guy back first because you want that deal to be able to keep moving forward. And there are some things that we have to come back to y'all for, right? Like a FHA amendatory clause. If that has to be signed by the real estate agent, and I can't necessarily accept the form. Some of y'all have them in your packages, in your contract packages, but I may not be able to accept the form that you have. I may have to use my own.
Okay, next question. Can you tell me about rehab loans?
Oh, I love we love rehab loans. This is like the manufactured home. Either you love it or you hate it. If you ask somebody, do y'all do renovation loans? And they go, the answer is already no. They better go yes, and we're good at them, because it's a whole different ball game. Like, whole different ball game. Fannie Mae has a program called their home style renovation loan. It's awesome. It's all the same underwriting guidelines as any other Fannie Mae loan, but you add in the ability to renovate the house. But there's a lot to know about it. I mean, a lot. And there are some extra steps. May take 5 or 10 days extra. The biggest thing is how responsive is the contractor going to be. So remember what I was saying a minute ago about an agent or a loan officer who may not call you back? If the contractor's so busy he won't get you the documents you need, then it delays the process. Rehab loans are great. If you're borrowing less than $30,000 extra and you're not doing anything structural, you can use your own subs. So if you're selling a house and all you want to do is paint the walls and put in some new carpet, you can do a rehab loan or a renovation loan on that. And almost everything is the same about it. Fees are a little bit more, the rate's a little bit more, but not so much that your borrower's not going to be thrilled that they got the house exactly the way they want. And guess what? If they're a first-time buyer, they probably don't have a lot of cash. If they don't do it in the loan, they're never going to get those renovations done, right? Their husband is going to say, it's okay, baby, we'll do it after closing. And then the wife 6 months later is going to say, hey, we still haven't fixed those kitchen cabinets that I wanted to paint. And he's going to go, I know, but we'll get to it. And the next thing you know, 3 years have gone by and they're calling you to sell that house. They never did a single repair. So the renovation products are awesome for people to really get what they want on the front end, and they're not that expensive.
Okay, why are VA appraisals many times short on the value more than other types of loans?
This is a great question, Beth, and it's a sad answer. And the answer is, just like anything else that's regulated by the government, you almost cannot become a VA appraiser. And the VA appraisers are held to such a low standard that they never get kicked off of the appraisal board panel or whatever. And so that they tend to be older people who've just been doing it forever, and they're slowing down just in life in general. They don't have the same, urgency that the rest of the world has. And I know that's a little bit of an unfair categorization, but I'm just telling you, that's my experience. So there's nobody to hold them accountable for the values that they're doing. Yeah, you can contest the value, but it's almost never going to get overturned. And there's definitely nobody to hold them accountable to the turn times that they take, because they take forever compared to regular appraisals. We don't get to choose a VA appraiser. We don't have a panel for that. It goes through the VA. So the VA controls all that. And guess what? Once that appraisal's done, it's like FHA. You can't go get another one. If you get a bad VA appraisal, you're not going back and saying, hey, I'm going to switch to a different mortgage company. I'll get a different appraisal. That VA appraisal stays with that property just like an FHA one does.
Okay, next question. Do you have any tips for working with first-time home buyers?
Yeah, that's a good question, Nicole. We love working with first-time buyers. You know, I get calls all the time. We run some radio ads and we get refinances, and a lot of refinance people, they've been through it several times, and you're not really providing a value to them in their eyes. You're giving them a lower rate, but they're just like, hey, I know what I'm doing. Can you just give me a rate? Maybe I'm shopping it, whatever. First time home buyers, most of them are like a sponge. They just soak up everything you tell them. So that's where we really get to say, I'm helping somebody learn and understand something that they don't understand. So the most important thing I can give you from an advice standpoint isn't really mortgage or real estate related. It's take your time with them. I mean, just slow down, spend some time, answering their questions. Ask them. This is my favorite question to ask a first-time buyer. Does that make sense? Did I explain that well? Like, because I speak mortgageese, right? This is what I do all day, every day. You guys speak real estate stuff. You go, hey, you need to sign this buyer's agency. They don't have a clue what that means. And they may do it without asking, but they'll respect you a whole lot more if you say, we call this a buyer's agency. This gives me the permission to really go out and help you find the right property. This is your commitment to working with me while I make a commitment to working with you. So mostly with first-time home buyers, it's just about education. We want to educate them as much as we can.
Okay, this is kind of a long one. So listing agents have difficulty in determining which offer to accept when they receive multiple offers. What advice would you give a listing agent to help them evaluate pre-approval letters from different lenders? And any advice for how the listing agent can supervise the loan process to ensure a smooth closing with an unknown lender?
Yeah, that's a great question, Hal. So I'm not on your side of the desk, so I can only tell you what I would do if I was. First thing I would do is if I would call any loan officer on any pre-approval letter and say, hey, I got multiple offers on this. Like, how comfortable are you that your client is good? Now, there's not much they can tell you, right? I mean, as a loan officer, I'm going to say, hey, Hal, I represent the buyer, and for privacy reasons, I can't tell you a whole lot. But I can tell you I've been in this business for 18 years, and I know what I'm doing, and I don't give out bogus pre-approval letters. So the first thing I would do is at least the top 2 or 3 offers I'm considering, I'd call a loan officer and see what kind of a feel you get for them. Because we all have tells, right? If you call them and they go, well, yeah, they're good to go. I mean, that tells you something. So I think it's not only a fair ask, but I think it's a smart thing when a listing agent calls me and says, like, I got multiple offers. What can you tell me? I can't really tell you much, but at least you can get a feel for it. The number 2 thing you can do is, and I mean, I'm not going to say this is 100% of the time true, but you're going to see trends as you work in this business and do more and more deals. And you're going to understand that there are some companies that they will give anybody a license and let them hang around as long as they want. And there are others who are going to train their people. If I get a call from you, an agent, on one of my other loan officers' deals, you better believe I'm going to have a long, hard conversation with that loan officer. Because guess what name is right here on the background? The name that I have. And I'm a loan officer. So if they mess up the Weber Mortgage name, if people are out there walking around saying, Weber Mortgage gave us a pre-approval, it was bogus, that reflects poorly on me. So look at the institution, look at the individual. In the end, it's a leap of faith. And then I'll tell you what we do to differentiate ourselves. We have a program we call our concierge program. And on that program, we actually send the borrower through underwriting either while they're looking for a house or before they start looking. So we have a pre-approval letter. That's the standard pre-approval letter. But if they've gone through the concierge program, we actually give a letter that says, this client is underwritten and approved, and we'll give the seller $500 cash if we don't close this loan. And that is our money. I've never paid out a single dollar on that program. I've been doing it for 8 years because I've already put them through underwriting, so I have no risk on it. So that's, you can, there are other mortgage companies out there who will do a pre-contract underwrite. I think we were one of the first to do it, and we've had phenomenal success with it. Any more in there, Jennifer?
There was a second part to that question. Well, he said, any advice for how the listing agent can supervise the loan process? I guess you kind of answered that one as well.
Yeah, I mean, it's tough because so we are very proactive in how we do things. And most of your bigger, like banks and lenders, are going to be worried about violating privacy. And in fairness to them, they have a bigger target on their back, right? If I mess up and I'm Weber Mortgage, I'm little old Weber Mortgage in Birmingham, and somebody doesn't think they can go to a plaintiff's attorney and sue me for $10 million and get it. I can turn my pockets inside out and show them I don't have it. But if Wells Fargo does it, they're going to go after them with like a headhunter, right? So a lot of lenders won't even let their loan officers talk to the listing agent. In our process, first thing we do when we get a contract is pick up the phone and call the listing agent and say, hey, Hal, I'm Michael Weber. I don't know if we've worked together before, but I'm working with the buyers on your listing at 123 Main Street. Obviously, I'm limited in what I can tell you, but I want you to at least have my number. You're going to get a couple updates, like when the appraisal is ordered, so you'll know to look out for that. You know, when we're ready to close. Anything else, you're welcome to call me. I just may be limited what I can tell you. And you can just judge by the loan officer and how they handle stuff like that. When you call them on that front end, you'll get a feel for whether they're going to be cooperative or not. That looks like it. Does anybody else have any last questions they wanted to ask? I'm probably boring y'all. Sorry about that. Well, look, I'm very grateful to the people who are serving on the YPN. I know committee service is not necessarily a fun thing. Hopefully y'all are enjoying it. And you look like you have a pretty good group. So y'all are probably cutting up and laughing, and Jennifer speaks highly of each of you. And I know that we're excited to be a part of what you guys are doing. In the same way that we love helping first-time home buyers, we love helping new realtors. We love educating you guys. We just want to be a resource for you. Jennifer will be contacting you. We have several other loan officers that work at Weber Mortgage, so we can find you a personality that works for you. And if there's anything we can do to be a resource for you, just give us a shout. We'll be around a lot of your YPN events.
Perfect. Also, so just a reminder that this is a networking event. So if anybody wants to throw their information into the chat, feel free to throw that in there so everyone can connect with each other.
I also have another announcement that I'd like to make too, while you guys are throwing your contact information in the chat. If you want to stick around the chat for a little while and talk amongst yourselves, you can. But one of the things I want to tell you guys about, who is familiar with the bar awards that go on every year at the association? Rookie of the Year, Realtor of the Year, that kind of thing. Do you guys, who knows that the nominations are open for that, for the 2020 awards? Okay, I'm going to drop the link in here, and everyone needs to start thinking about who they're going to nominate. Do you have a wonderful affiliate you'd like to nominate for Affiliate of the Year? Hint, hint, hint to anyone on the Zoom call. Also, we have a new award out this year. Not in addition to the Rookie of the Year, we're doing a new award called the Rising Star of the Year, and it's for a new realtor. And this is going to be the first time, so there's going to be some stiff competition, I'm sure, to see who becomes the first one to win that award. So I just wanted to throw that in there. You can find that later on the front page of the BirminghamRealtors.com website. Go out and look for that email about voting. Some of the two amendments on there, like Amanda said earlier, will kind of make things a little easier for the membership, less cumbersome to do business, and easier to get your code of ethics done. We have a YPN event coming up in March. Don't forget about that. You'll get an email here soon next week about it. There's lots going on in the chat there. I'll leave this open for you guys for a while just to talk. If you want to unmute yourselves, go right ahead. Any questions for me here at the association?
Can I just say real quick, I'm going to send out the presentation that Weber did to everybody. So I call his name's Michael Weber, but we call him Weber in the office. So I'm going to send out the presentation. But if anyone has any specific loan questions that you think of maybe after, feel free to either text me or shoot me an email, because we can always get those answered for you if it's something you just think of like, oh, I wish I would have asked that. So we're definitely, I'm going to offer you guys at YPN stuff, but please use this as a resource or use me as a resource.
Great.
Thanks, y'all.
Thanks again, Michael, so much for your sponsorship today and for sharing with us. I learned some stuff, and I've been a homeowner for, oh my gosh, I hate to say it, 30 years. But thank you so much.
Y'all can't see this, but behind me is Hal's mother's house. I was fortunate enough to buy his mother's house, and we love it, Hal. We're having so much fun here. Thanks.
Well, I'm glad you're enjoying it.
We are.
Who knows what Realtor Fest is? Anybody? Anybody? It was missing last year from the list of events. It's coming back. May 20th, YPN is in charge of putting it together. And that's when we're going to be presenting the bar awards this year on May 20th. So if you know a rookie, realtor of the year, sales associate of the year, if you got a broker that you love and you want to nominate, get in there and nominate them. I recorded today's presentation. We'll put it out on the social media too. And we'll put a link to it in the email that goes out next week if you guys want to share it with other folks that missed out today.
Sounds good.
Okay, guys, I gotta go cook some burgers for some unhappy, hungry families. So I'm gonna check out. But thank y'all again, and let Jennifer know if you have any questions for you, and we will definitely get you some answers.
Thank you for your time, Michael.
Bye, y'all.
Thank you.
Yeah, we also have created one of our big initiatives as a loan company is creating video. In video, so if you guys ever have a loan question, or if you have somebody ask you something that's really, really in depth, like we got a lot of student loan questions, we actually can make a video that you can then share. So that way you're actually not the one having to answer it. But if you guys look on like our YouTube or social media, we have a bunch of different videos on there, and where we talk about different topics all the time. We also shoot videos with realtors too, so if anybody wants to jump in a collaboration video, we are open to that too.
Awesome.
Okay. Everybody get a chance to share their contact information that wanted to. I put Open Mortgage website down there at the bottom of the chat. Last entry there.
Yeah, looks like everybody's
Thanks,
done
Stephanie.
sharing.
Yeah, you're welcome. All right, expect to see everyone back next month. Next month's event is hybrid, so we're going to have the first 30 people who sign up for that new series, The Listing. We'll get to attend in person if you want to attend in person. You'll have bagels and coffee, and we'll do social distancing downstairs. That's all we can accommodate this time in the classroom. For those that have been in there before, you know we can get quite a few more people in there than that, but not during the COVID pandemic.
Right.
And then, so the second part of that series is going to be, now you've got the listing, how are you going to market it? The third part of that series in a couple of months is going to be how to use that listing to leverage yourself for new business and gain new business from it. So it'll be a pretty good series on the listing. All right. Well, if everyone has grabbed the information out of the chat that they want, let me know and we can all maybe sign off and finish our.
It looks like everybody's done.
Okay. All right. Well, thanks everyone. Have a good night.
Thanks.
Reach
guys.
out to
Have a
me
good
in the
one.
car if you need to.
Thanks, everyone.
Bye.